That's got all the earmarks of being a run.
Silicon Valley Bank was the first to fall, followed by Signature Bank.
A lot of us were panicking whether we'll get our cash back or, whatever money we are left with on the bank.
Both banks were weirdly vulnerable. A whopping 94% of SVB's deposits were uninsured, while Signature was closely connected to the volatile crypto market.
There may still be concerns over bad loans in the tech sector or poor asset quality at the banks.
Now there are fears of a dangerous domino effect. Sturdier banks like First Republic and European giant Credit Suisse starting to teeter.
There's panic and they're starting to pull their money out, and concerns that banks might not be able to give the depositors their money back.
Once the contagion starts to spread, even healthy banks are vulnerable to a run. Here's Jimmy Stewart with more.
You're thinking of this place all wrong, as if I had the money back in a safe. The money's not here. Your money's in Joe's house and 100 others. We can get through this thing all right. We've got to stick together, though.
And if panic takes hold, it can become a bloodbath.
It's in Bill's house and Fred's house.
Hey, what the hell you doing? My money in your house, Fred.
The Swiss Central Bank has chucked Credit Suisse an $80 billion lifeline, while a posse of Wall Street powerhouses have pumped $44 billion worth of confidence into First Republic.
I can reassure the members of the committee that our banking system is sound.
Yeah, but she would say that, wouldn't she? But while some Aussie businesses have already taken a haircut, the Treasurer is confident that the much more heavily regulated Aussie banking sector is safe.
We are well placed in Australia to withstand some of the vulnerability elsewhere in the world in banking systems.
But he would say that, wouldn't he? I'm kidding, guys. I'm sure it'll be fine.
No one panic. ABC Business reporter Dan Ziffer has buried his life savings in the backyard just in case. Dan, is Jim Chalmers right? Will our banks be okay?
We should be. We've got a really tightly regulated banking environment here in Australia. And here's the most important thing. If you've got less than $250,000 in the bank account, it's guaranteed. Doesn't matter if it's in a bank, a building society or a credit union in Australia, the government will guarantee it even if that organisation fell over. And if you've got more than $250,000, first of all, well done. But also, our banks are really safe. We have this really highly regulated environment that's really onerous and they complain about it all the time, but it's there for a good reason to stop these kind of problems.
We might be relaxed here, but globally, Dan, there are a lot of bankers, regulators, even Treasury secretaries that are nervous about what is unfolding. And we're hearing this term contagion. What does that mean? How do you prevent it?
Well, contagion is essentially when the loss of confidence spreads out. And there is no doubt that bankers around the world would have been wearing the brown underpants to work for a really long week of late nights because it has been a really stressful period. But one of the things that you need to know about these American banks that have fallen over is, first of all, there's thousands of banks in America of all different size and scale. A lot of the banks that are in trouble are ones that have had a really high percentage of those unsecured deposits, of those big deposits above $250,000. Now, the mega banks, the names we remember from the GFC, have poured their own billions, $45 billion, into one of the American banks just to provide that shot of confidence to tell people this is not like 2008. You can have confidence in the financial system as we weather these kind of little storms.
So does this bring fears of a recession any closer to fruition?
There's immense fear around. You've only had, these are not new, recent things. The Bank of England says the UK is going to be in recession. The Federal Reserve, the central bank of the US, talks about a recession in the US. Here, our Reserve Bank talks about a narrow path for avoiding it. So a recession, which is where economic growth goes backwards for a long period, has real world impact. It hurts people, unemployment goes up, people don't have enough money to meet their commitments. There is real global fear that in developed economies like ours and others, a substantial proportion of them will be in recession this year. And because we trade with them and we sell things and buy things from them, that has impact here. Australia is in a good position. We're making seemingly sensible choices, but the risks are there. It might happen.
Definitely. Now, Dan, I definitely listened to all of the answers that you just gave and completely understood all of it. I'm good with both numbers and money. But asking for a friend, a Dolomite account's safe.
Dolomites accounts are safe, unless you have more than $250,000 in your Dolomites account, at which point above that you're in trouble. But then again, the Commonwealth Bank is pretty safe and has been around for a while. I feel like if it ever was in trouble, the government would probably step in. So I will say, categorically, your Dolomites account or any savings account that a child has out there is safe.
Okay, good. I'll tell my friend.
You have no idea how good Susie Youssef is with 20-cent coins. She's got a lot of them.
Dan, thank you for taking us through it all tonight.
It all adds up.